Welcome to Breaking Bread Presents on the ones and twos. Now I wanted to make a quick video to show some of the ways of how I use a 1 minute and 2 minute time frame for entries when day trading options and futures. Now I know we've all heard traders say that you're asking for failure when trading on these smaller time frames. And I'm telling you to do what works for you. Now I found along my trading journey that I am a nosy trader. Yes, I am a nosy trader. I want to see the picture that price is painting stroke by stroke or candle by candle. So this is what works for me and this is what feeds me, and I hope something in this video helps feed you and yours. So what am I going to be talking about in this video? I'm going to go over the pros and cons of trading on the smaller time frames. I'm going to talk about the higher time frame confluences. I'm going to tell you when you should take the trade. I'm going to take it to the charts, and then we're going to go over the key takeaways from the video. All right, so let's start with the pros. So some of the pros of trading on the smaller time frame are sniper entries. When you're able to see price get to a key level and it gives you some type of reaction, either a bounce or a rejection, depending on which way you're playing, then you're getting into these plays at a discounted rate. That's a sniper entry for me. When you see this, price respecting a strong level, and then you're getting into your play at a discounted price. Another pro of trading on the smaller time frame is you're able to see the structure that price is building. You're able to see if we're ranging, if we're consolidating, if we're respecting the levels, if we're breaking any highs or lows. You get to see that clearer on the smaller time frame. Now, some of the cons can be that it's a lot of noise. If you're trading on the smaller time frames, it could be too much noise when you have a candle coming in every 30 seconds, every minute, every 2 minutes, and sometimes the 5 minute time frame. So that could be too much noise for some traders. And then possible fake outs. I'm sure we've all been in a play where price breaks out a level only for it to turn around and go back the other way. So that is definitely possible on the smaller time frames. And then you can also fall into the trap of ignoring the higher time frames. So with all the noise that's going on the smaller time frame and it's keeping your attention, you're forgetting about the higher time frames and those stronger levels that are on these higher time frames. So you want to be careful not to fall into that trap. But how can we take these cons and turn them into high probability setups? Like I said, we go to the higher time frames. Now, when I say higher time frames, I'm talking about the 15-minute time frame and up. So when do we take the trade? So the goal is to wait for price to enter an area of confluence and watch to see what reaction price gives, if any. Now, I'm recommending that you wait for a retest at this confluence area. And I have an example here. So you see, this is the 2 minute time frame, I believe. Yeah, it's 2 minute time frame. See, price came down. Came down to this pink line and created this area of support. You see price is holding well above this level until it pushed down past it, but closed above it. So this is a strong area of support before it starts to take off to the upside. So this is a strong area of support. So what I'm recommending is for you to wait for the retest. Now I know most will probably get into this play right here once this candle didn't come take off this low. So this might look like higher lows in your eyes. And you can definitely do that, but I am not recommending. What I am recommending again is wait for the retest, especially at market open. And especially if you're a person that gets clapped at market open, just wait for the retest of that strong level. So as you can see, price popped up, it began to sell off and started heading back down. Now we're back retesting the level that we came from. So this is the retest I'm talking about. And this is a strong area of confluence because this purple line is my broadening formation and this pink line is support. So this is the area of confluence to possibly take this back to the upside. And this is an example of a fake out. Because if you see price dropping like this, you see this candle push past the support level. So I'm pretty sure some people got stuck in this play for puts because they thought it was going to keep going. But if you know the anatomy of a candle, you see that price opened at the bottom of the body of this candle. It pushed to its lowest low before pulling back up, creating this high and closing at the top. So the fake out comes because price pushed past this level, but it never closed. It pushed past. So this is how the market gets trapped in these fake outs, because it had pushed past the strong level, but it never closed. So you want to be mindful of that. Okay, so this is the same chart, but this is on the 15 minute time frame. As you can see here, based off my strategy, I trade the scrap. My entry would be off the high of this candle to the upside, which is probably a safe and high probability setup. But for me, I like to get in my plays as soon as I see price reacting on the higher time frames. So once I see price push down to this level of support and start to pull back, this is when I'm dropping down to the 1 minute or the 2 minute, depending on how I'm feeling that day. And once I start to see pull back, that's what I'm doing. I'm going down to the smaller time frames and seeing if I can get into that play. All right, so this is both time frames that I showed you guys. The 2 minute, 15 minute. Gray area shaded here. It's the same areas. See, price popped up, came down, tested the support level, and started to head back up. So once I started to see price push past the support level but start to head back up, then I'm going to trust this based off these images back to the upside to test out those highs. Also, when you're trading futures and NQES, YM, whatever you're trading, just be mindful that, yes, when you see price hold a level, it doesn't normally just take off. It normally ranges before it popping. So just be careful with your entry on that. So based off this, once I saw this on a higher time frame, I'll go down to the smaller time frame to look for entries. So I would probably get in somewhere within this range for this pop up. And you can see the pink line is where I would get in off the 15 minute. Once the high was broke on this candle, then that would be my entry. And I just feel like I don't want to get into this play when it's already up here, when I already had confirmation down here, and now I got this price, this contract at a discount versus getting it up here at the top. So this is why I drop down to the smaller time frame once I see this either at the top or the bottom for calls or puts, doesn't matter. You're looking for the same thing, but once I saw this, I drop down to the smaller time frame, take my entry, and once I get in my play, I'm going back to that higher time frame, and I'm gonna watch it from there. So don't stay on the smaller time frame. Go back to the higher time frames. All right, so let's take it to the charts real quick and show you a play that I actually took and why I took it. All right, so here we have SPY. I think SPY on Friday, yeah. SPY on Friday. I want to play back this play for you guys. At market open, like I told you guys, if you're a person that get clapped at market open, you're having a hard time getting entries at market open, this is definitely going to work out for you if you can just be patient and just wait for this retest. All right, so you see price gapped up. Price gapped up, right? So we're going to treat this level, the top of this gap as a level of support. And let's see what price did. All right, so far right there, price touched it one time. And it touched it twice. So this is a strong level of support here at the top of this gap. All right, now you see price popping off of that level. So now what we're going to do in this moment, we want to see if price comes back and retest that level. If it never comes back and retest that level, then we're just going to go ahead and move on to the next play. But we want to see price come back and retest this top of the gap. So we want to see price come and test these lows and see if it takes it out. or does it just reach for it and fall short and head back in the opposite direction? All right, so we got our first pop here. All right, so we had 3 tries to take out these lows, and it didn't do that. So since we see that, then this is where we're gonna look to get into this play. And you see we're making higher lows. So if we're making higher lows, that means we're going up. So we should be making higher highs. So the goal is to take out these highs that were created before this retest happened. So again, I would look for an entry based off these in this range right here. And if you look, this is a 30-minute time frame on this side. So this 30 minutes is this drop here. So again, once I see price respect that level of support, which is the top of that gap, and start to pull back up, then I'm going to go down to the smaller time frames and see where I can get into this play at a discount. So you see we still currently making higher lows, so that still means we're going to the upside, right? Making higher lows, higher lows. We're making higher highs. So we're still trusting this to the upside. See on that counter right there, it took out that high. And that was our objective, to take out that high. So that's what you're looking for, especially at market open. Now you can do this anytime throughout the day. If you see some type of retest of a strong level, you can definitely do that at any time of the day. But like I said, if you're a person that gets clapped at market open, or you're having a hard time with entries at market open, then just wait for this retest. If it never comes, then move on to the next play. No big deal. There's always another play. And just because I'm a fibber, I want to throw my gap on this throw my fib on this gap and see what level did it bounce off of. Just because this has nothing to do with anything. If you guys want to be find out what I'm talking about, just go look at my fib and gap videos. I have those posted, but I just want to see where it bounced at because I'm curious. Okay, so it went right to the 61.8 in my fib and then bounced right off of it. All right, cool. Had nothing to do with the video. I just wanted to see it. But as you can see, that was a strong area of confluence. That was a strong area of confluence to take this back to the upside. So you guys just want to be mindful of that. You want to find your strong area of confluence. And then once you get into the play, go back to the higher time frame and watch it from there. As long as you're not getting signs of a reversal, then trust that to the upside. I hope that helps you guys. All right, so of course I can't leave without talking about mindset. You know, I always have to touch on mindset because I feel like that's the most important aspect of trading that we don't talk about enough, and I feel like a lot of people struggle with. And the aspect that I want to talk about today is self-doubt. This is the part that I want to focus on today. I know doubting yourself only prolongs the success. Doubting yourself will prevent you from executing on trades. It happens. I've heard far too many stories, even some of my own, where traders will tell you everything that they see on the chart, the A1 setup, high probability setups, and they fail to execute because this market has them doubting themselves. It happens, especially if you've been smacked around by this market. So that self-doubt does grow. But that's just the mind trying to protect you from something that you went through before and you didn't like the feeling of that. So the mind is just trying to protect you from that. But that is something that we must overcome. The lack of self-belief can hinder you as a trader and your ability to execute with conviction on your trades. So some of the ways that I combat self-doubt is just stepping back. Step back, get away from the charts, go outside, go jog, go run, go take a swim, whatever you got to do, but just go get some air and clear your eyes and mind and talk yourself through it. Another thing that I do is I journal my trades. So we know in this trading world, you will find that it is a lonely space. No one is in your immediate space can fully understand the mental challenges that we go through as traders. This is tough. So you pretty much have to become your own psychologist sometimes. So journal every trade you take, journal the ones you don't take. Write it down, write what you felt in that moment, why you felt that in that moment, and then review it at the end of the day so you can see what's causing you to doubt yourself. And then try to correct those behaviors. Then you have to treat a setback as growth. It's far too often we'll take an L on a trade and somehow feel we just took 2 steps back. No, flip it. Look at it positive. No, we didn't take 2 steps back. We grew 2 inches, right? So you want to learn from those lessons, those L's that we take. Learn the lesson in that and apply it to the next trade. And I promise you'll be successful. All right, so some quick tips before we get out of here. We're going to avoid the fake outs. So like I told you, playing on those smaller time frames will cause you to hop into plays, FOMO into plays because you think it's going to break out. But to avoid that, you go to the higher time frames and see if price is respecting your levels. Is it closing or above these levels that it's breaking out of to avoid these fake outs? And don't get sucked into all the noise. Yes, playing on the smaller time frames can bring a lot of noise. It definitely can. But you want to make sure you remember to go back to that higher time frames to look at those higher time frame levels. Those are your stronger levels, right? The higher the time frame, the stronger the levels. So make sure you're not just staying on the smaller time frame, getting sucked in and forgetting your trading plan. So make sure you go back to the higher time frames. And then you want the higher time frame confluences. So once you see price retrace to a level and start to pull back on the higher time frames, you want the level of confluences. So whatever you use to read price action. With me, it's Broadner formation. With you, it could be VWAP, EMAs, SMAs, whatever you use. You want to find these areas of confluences and you want to see price retest those areas. Retest back to those areas. Like I said, best to wait for a retest of your level, especially at market open. Wait for that retest and take it back in its original direction. This is clutch for those who are having a hard time with entries at market open and are just having a hard time with entries, period. Just wait for that retest and wait to see if price gives you a reaction at one of those strong levels. You just make sure you have to be patient. Let price work for you. You don't work for price. So let price give you the setup that you want. And last but not least, never doubt yourself. You know how great you are. You know how great you are. Let me say it again. You know how great you are. Don't let this market discourage you, having you thinking you can't do something. You definitely can because you've done it before. You just got to keep doing it and keep believing in yourself. And you will become the trader that you want to be. But you got to keep trusting yourself. All right, so we have come to the end of this video. I hope the information in this video will assist you along your way. Like I've been saying, that since the start of the year, this will be our winning season. If you have any questions or comments, feel free to drop them in the comment section below, or you can DM me and I'll get back to you. But until next time, I thank you for breaking bread with me. You all stay blessed.